Hello everyone, we're going to talk today about the FHA seasoning requirements, and we had done another video in the past about just general seasoning requirements, which included investment properties. This one is for FHA specific loans, refinances, and FHA's got multiple types of refinance options. So for a traditional rate and term refinance, you may be able to refinance immediately after you purchase the home. However, the original purchase price will be used as the value when refinancing. Okay. Now, if you have the other issue you're going to find though is that if you have not occupied the property as your primary residence for the past 12 months, you may also be restricted to 85% of the property's loan value or home value or purchase price that you bought it at. Which means for this to work at all for a home that you've owned for less than a year, you need to have put at least 15% down. You also may not have any late mortgage payments in the past 12 months. That would disqualify you from refinancing. So I know it gets a little bit difficult to understand what I just kind of took you through. One of the loan officers will definitely be able to walk you through it to see if you qualify and if you can refinance now and what the rules would be for you. So now let's talk about the FHA Streamline Refinance, because that's a very popular program for people that are refinancing FHA loans because they are not going to require income checks and no appraisal, which is helpful. So you must have made at least 6 payments on your current mortgage that you have right now, the one that you're trying to refinance. At least 6 months must have passed since the first payment date of your current mortgage. So after you've purchased the house, you're going to eventually have your first payment will be due. 6 months from that date must have passed, and at least 210 days from the closing of the purchase of that home needs to have passed. So that's a lot to swallow there, but again, a lot of rules, but it can be done. The other thing is, again, no late mortgage payments. I think I may have mentioned that already. Now, a cash out refinance, a little bit different. You're going to need to wait a year before, or 12 months before you do a cash out refi. For cash outs, you're going to be, the maximum will be 80% loan to value on that. I think I have a video for FHA cash out refinances. I'll link to it up here. You can't have any late mortgage payments on that either. There's really no program where you can have late mortgage payments. Maybe one you might on a purchase. And again, you must occupy this property as your primary residence. So that's what the FHA refinance loan seasoning is as it stands today. If you have any questions, you can definitely follow the link in the first pinned comment and also in the description. And someone can help you to give you an idea as to what your rate will be, whether you're able to refinance, whether the waiting period has passed, all of that. Now you may have purchased the home below market value, so you're thinking you might try to refinance to cash some of that money out. But again, you're going to need to wait 12 months if you want to do this FHA. So hopefully that helped. If it did, please hit that like button down below and hit the subscribe button if you want to see more videos. Thanks again for watching. We will see you next time.